Imagine owning a piece of India's transport backbone, the trucks, the buses, the massive freight machines driving the economy. Now imagine that business becoming its own company. That's exactly what Tata Motors is doing. The commercial vehicle arm is being carved out into a standalone listing. But why now, and what does that mean for you, the investor? In the next 30 seconds, we'll reveal how this move could unlock 90,000 crore rupees of value, and why many retail investors haven't even noticed it yet. Here's the deal. For every share you hold in Tata Motors before the record date, the 14th of October 2025, you'll receive one share in the new commercial vehicle entity. Then on the 12th of November 2025, the CV business lists independently. The passenger vehicle plus EV plus JLR businesses remain under the other listing. Why is this important? Because two companies equals two valuations, two business models, two growth stories. But here's the twist, the implied value of the CV arm is currently hidden in the parent's price. And that leads us to reveal number 1, which is coming up next. Before the split, Tata Motors traded at about 660 rupees per share. After the PV arm opened near 400 rupees, by subtraction the commercial vehicle business was being valued implicitly at 260 rupees to 270 rupees per share. Analysts believe the newly listed CV arm could list higher, given its sheer size and leadership in India's transport sector. This is our first major reveal. There's a value gap that the market hasn't fully priced, basically a potential upside for sharp investors. In the final scene, we'll reveal the two biggest risks you must watch, and whether this is a smart buy now or a wait and see. But no story is perfect. This CV business is cyclical, heavily dependent on fleet replacement cycles, infrastructure spending, and financing costs. Margins can swing with fuel and freight cost pressures. Also, the newly listed stock will face the usual listing volatility as it enters trade for trade mode for the first 10 sessions. So our second major reveal, it's not just about upside, timing and risk matter big time. For some investors, the PV, EV entity might be the better ride. For others, the CV arm could be the contrarian value bet. Ready to pick a side? Or both? Stick around for a quick wrap-up and exactly what you should do next. If you're serious about Indian stocks, demergers, unlocking hidden value, hit subscribe now. Turn on notifications so you never miss our breakdowns. Drop a comment. Which side are you watching, the CV arm or the PV, EV arm of Tata Motors? Give this video a thumbs up if you found value. I'll see you in the next market deep dive.